please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Ravi Venkatesan is a many-splendored personality, a technology professional and a veteran of chairing many large and respected companies like Microsoft, Volvo, Infosys and Cummins. His accepting to be Bank of Baroda's non-executive chairman came as a pleasant surprise. It came along with another private sector professional, Jay Kumar, getting appointed as MD and CEO. This is the first time and the only instance where the government has experimented with giving both the top posts in a PSU bank to private sector honchos. Venkatesan's term ends in 2 months. All he was paid was 4 lakh rupees for all the 3 years put together at Bank of Baroda. And he has given that amount away in charity. He came to do public service. So what did Ravi Venkatesan and his MD achieve? We have the man himself. Let me first start with the question, what have you done for Bank of Baroda? What do you think you have accomplished?
Well, I think what we have accomplished is something that first time will tell, because we've started many things, but they're still very much a work in progress. And frankly, it's something others should say rather than me. But I'll perhaps talk about what it is we've tried to do. Okay. So, you know, I started, and in the very first week, there was this big issue, which was called the Ashok Vihar scam. Okay. It was a money laundering scam where people had exploited our bank. And at that time, Jaya had not joined. There was only one ED on board, and that was the start of the adventure. Pretty soon, Jaya came, and what we decided is there's a whole host of legacy issues, the NPAs, the frauds, and a whole bunch of stuff. And then there are sort of a whole set of other issues which are going forward, look forward, which are even more important. How do you prevent these things from happening again? Yes. Because they seem to happen with some regularity. How do you create a bank which is able to compete with SBI and with the best of the private sector? How do you catch up on technology so you don't get disrupted by the fintech companies, etc.? And we felt that the obsession with stressed assets shouldn't distract us from this agenda. And frankly, I've been more focused on these issues. So, one of the first things we started to do is rethink the architecture of the bank. We said, listen, if you look at a contemporary bank anywhere in the world, they've got what's called a front-end, back-end architecture. So you have branches that serve customers, but all the transaction processing is done in a back-end. Yeah, and so we said, this is obviously happening for some good, sound reasons. Yes. So we said we'll migrate to that, and we created a whole subsidiary, shared services subsidiary. And so took every process from account opening to loan processing, your trade finance transactions, digitized them and put them in that subsidiary. Okay. And this is still a work in progress, but it is going to be probably the single most lasting change when it's accomplished.
Well, let me interrupt you there. I particularly had great expectations, and I would assume a lot of people, investors, from your combination, because you come from Microsoft, you come from Infosys, you've come with a lot of with technology experience, and you came exactly at a time when fintech took over banking.
Sure.
So how much of that fintech could you incorporate in BOB?
So first of all, I think we should talk about tech and fintech as a subset of that. So when you talk about tech, as I said, we started by digitizing and centralizing processes. We have taken all the paper-based systems, automated them. By October, that should be complete. So you go into a BOB branch from September, there shouldn't be any paper. Oh. Okay. We've implemented tab banking, so if you are a new customer walking into a bank and you want to open an account, it's now less than 10 minutes with Aadhaar, and you walk out with your account activated and your debit card. What else have we done? We upgrade. Now you can dream about fintech, but if you don't have the core technology platform that is contemporary, it's a problem. So we had to upgrade our core banking system, which coincidentally was from Infosys. Yes. And that proved to be a non-trivial transition. We upgraded our mobile banking, our internet banking. We've implemented 40 enterprise applications, just an enormous amount of work. On fintech in particular, we decided this is culturally very different. It requires a different mindset, and we have to partner with fintechs, not compete with them. So we set up a fintech vertical, and now we have 25 partnerships which are delivering, even at Bob's scale, a significant amount of business. Now you can do all this, but technology, as you know, moves pretty fast. And so in 2 years, you're obsolete again. How do you prevent it from happening? We've created an IT subsidiary and brought in Accenture and IBM as our partners to make sure that this bank stays contemporary.
Okay. Well, you know, before I embark on analytics and what that can do to the bank, have you been able to restrict the number of windows through which frauds can happen? Because that is the big problem that we are suddenly faced with the Punjab National Bank fraud. From your experience and Jayakumar's, could you identify the windows through which these seep in?
It's a great question, particularly in a bank which has as large a surface area.
Yes.
That's a big deal.
I think it's India's most international bank. It's
India's most international bank. We have some 70+ million customers. And now you've got all these devices which are also accessing the bank. So it's a great question. So our approach has rested on 3 things. One is, of course, centralizing, automating, and putting them in a shared service center and separating, responsibility. The second thing we've done is set up a dedicated fraud risk management unit, which reports into a third ED who doesn't have any of the businesses. And so, and they're using technology to be able to continuously detect frauds more quickly, etc. The digitization of the bank is actually the most interesting thing, because it's throwing up a huge amount of transaction data, and you can completely change the audit process. Today, the audit process happens after the fact. It's incredibly manual. It happens in a decentralized way in the branches. Now what you can do is be preventive, use analytics, and you can do it in real time. So all this thing, I think, reduces, probably never eliminate, the possibility of fraud.
So would you say that now chances of this kind of a fraud, this kind of, the Punjab National Bank fraud passed through so many fingers.
Indeed.
It slipped through the internal auditor, it slipped through the external auditor,
Indeed.
It slipped through the bank's, elementary things like change of personnel at a regular, level. As well, it passed a lot of external tests as well. Would you say that in Bank of Baroda such a thing is now much, much less likely?
Less likely. So one of the things I'm expected to do is chair the high value fraud committee of the bank's board. And I come from a manufacturing background. Way before Microsoft, I spent 16 years building engines. And in manufacturing, what you do is every time there's a defect, you don't just fix the defect. You go back and look at the system that produced the defect and make the changes. So we've tried to bring that mindset into each of the frauds. What is the fraud, what is the modus operandi, and have we gone back and fixed the system so that this modus operandi is defeated? I think we have moved the needle. I would hesitate to say that we have
no one can perhaps say never again.
Yeah, but knock on wood, I think we've made considerable progress.
So you would be able to, by August the 13th, put down a set of SOPs that can be employed in other banks as well, so that we can...
Exactly. I think the whole point of running experiments like BOB is to see what worked, see what didn't work and why, and try and replicate that in the system. And I hope wise people do that.
Okay, but what's your sense? Is this an experiment worth repeating? Getting 2 private sector people at the highest level, and would you say it's a successful experiment? I know it's only incremental change, but...
Yeah, well, first of all, I think what the government's all clearly decided to do, which is a good thing, is separate the role of chairman and managing director across the board. I think that's just so sensible, and I'm very glad they did that. Now, what do you do about the MDs? Okay, because there are now several chairmen who are not very dissimilar to me. I think the crucial role is the CEO of the bank. And, I don't want to say that you should only go to the private sector. I think there's plenty of good talent inside as well. I think the crucial issue is to be able to pick the best possible people for the job and give them enough time. 3 years is not enough time. We think We meaning the whole banking system. We think CEOs need to have 5 years to see things through. I want to belabor this point a bit because it's the crucial issue. If you look at why does State Bank so significantly outperform the rest?
Banks.
A lot of it has to do with the fact that they operate under a separate act, which allows them to grow their own talent. Their CMD, their joint MDs, they all come from within. And therefore, they're able to create a coherent culture. They're able to see through strategic change and transformation, which can take 5 years and 7 years. I think that's an incredibly important thing, and I would hope that the government can find a way to, replicate this, not just at BOB, but all of. Whether this can be done with government majority ownership is, I think, a big question.
So if you're asked to stay on for another term, will you?
Actually, there was an informal request that I do, but unfortunately I have made a commitment to start my next adventure in September. And so, much as I'd like to see things through, it'll fall to someone else.
Now, that's the first news point you've given me, that you are going to put down the pen in Bank of Baroda as of August 13th. Can you tell us what's the next venture then?
Not yet.
Okay. That's for the next interview?
Yeah, that's right. Never waste an opportunity to talk again.
Okay. All right. Until now, I spoke about how you tried to influence Bank of Baroda. But how did Bank of Baroda change you? That question after a short break to Ravi Venkatesan. Mr. Ravi Venkatesan, now mores and protocol change this private sector professional?
Well, you're right. I'd never worked in the public sector before, had no idea how to navigate that, and I'm not a banker. I think the first is an understanding of what a bank really does. In a public sector bank, what are the constraints, what are the compulsions that people operate under? You find that they're extremely smart, with great tenacity, and under different circumstances, hey, it could have been you. How do you get people to motivated when you don't have the usual tools that the private sector has?
Like an ESOP.
Hire, fire, financial how do you hold people accountable? How do you motivate them? And you have to, and to a very significant extent, it is moral suasion. Okay. How do you lead a board when your appointment letter merely specifies what you should not do? So as a chairman, I have absolutely no authorities, yet you're expected to lead this.
You can't even appoint your CEO.
You can't appoint CEO, you don't appoint anybody else on the board.
And your CEO can be removed without even you knowing it.
Without you knowing it, and so on and so forth. But yet there is an expectation that somehow you will persevere and deliver a transformation or superior results. And so I think it has taught me a wider range of skills or tools to be able to operate, and I think I'm a better leader for that.
Okay. You've written in the Hindustan Times a very incisive piece on what needs to change in terms of the banking sector itself, the PJ Nayak report. What would you say is the most important change the government should do? Because they're saddled with a big problem in terms of NPAs.
I'd say two, and then perhaps a third thing. I think the first thing is to fix governance, because if you can't fix governance, you really are pouring money down that leaky pipe.
And for fixing governance, you need to reduce government stake, you think?
I'll come to that. So the first job is you have to empower the boards. The board has to have the ability to appoint others with the right expertise. It has to have the power to appoint the CEO, the executive directors, shape strategy, give them their targets, hold them accountable. This is just the most foundational aspect of governance, and we don't yet have that.
Compared to you as a chairman of the Infosys board and of the say Cummins board, if you compare your position here, you think that you are not empowered enough.
It's not just me as a non-executive chairman. The board itself is not empowered to do these things, and I think that is just foundational. I think the second one is to address the talent issue, because I think you can have all the strategies and ambition and the opportunity. If you don't have the right people in the right roles, you're not going to get very far. And here what we have, as I said, other than State Bank, you do not have a systematic ability to attract the best or a competent person for the role of the MD, EDs, etc., and give them enough tenure. You don't have the ability to recruit out from outside laterally, even into specialist positions like technology or risk, etc.
You can't appoint them?
No, there is great difficulty in the system. So now we are working with the government as a group of public sector bank chairmen to try and get a framework that would allow this. So these, I think, are just the two most fundamental improvements without which I cannot see progress being made. If there's a third one, it would be to eliminate fear in the system. You know, again, the Nayak...
It's a newfound fear.
It is not a newfound fear. It was addressed in the Nayak committee report in several pages. I actually, before I took this and had the courage to take it, I read the report and actually met Mr. Nayak. And there are several pages on the fear of CBI's, you know...
Yes, the 4 Cs, yes.
Yeah, CVC and all that. I think the recent events have conspired to amplify that fear by at least 2 orders of magnitude. And it's not just management which is now scared. Even non-executive directors are getting pretty apprehensive. Now, this fear, it's really paradoxical. On one hand, all this system of accountability doesn't seem to slow down frauds and bad lending decisions. And on the other hand, it creates paralysis. So I think this is incredibly dangerous and debilitating, particularly at a time like this when you want bankers to make more decisions, run faster, etc.
My shows have to be half-hour. So let me pack in the other questions that I wanted to ask of you. Obviously, the big problem is NPA. And you understand industry. I mean, from your Volvo, your Cummins, your Infosys experience. From your point, do you think that we are past the hump? The NPA, the bad loan creation, the recognition, is that over?
Yeah, I hesitate to say it in an extremely affirmative way because the last 2 times Jaya and I have said it, we haven't been correct. But this time it does appear like the worst is behind us and that we've bottomed out. Particularly, I think the destiny of individual banks is now divergent. I don't think it's fair to club everybody together and talk about the system. So particularly in the case of BOB, I think we're in reasonable shape, knock on wood, because we started the journey much earlier. Now, very second quarter, we were the first bank to recognize, had the biggest loss ever in the history of the bank, and we've taken our provision coverage ratio steadily up to, 58% or thereabouts. And we think the resolution cycle is now beginning with Bhushan Steel and so forth. So if that sustains over the next year, I think we are okay. We should generate this year about 12,000 crores of operating profit. So our sense is, at least for BOB, the best is over. When I hear Rajneesh at SBI, he seems to show some confidence as well. So my own instinct is that given our pulse, when you look at what's happening in industry, Maruti is expanding capacity, Ashok Leyland expanding capacity, Tata Motors, India business beginning to perform, machine tool builders orders, just, chock-a-block. I sit on the board of JCB, construction equipment. We're now again reaching the top of the cycle. So it feels like industrial activity is on the rise. On the other hand, you have macro headwinds. Yes. How these two are going to balance each other, I can't predict. But knock on wood, I think the worst of this would be behind us.
The standout number in the Bank of India Bank of Baroda previous result was the loan growth. I mean, the loan growth was extraordinary. So I think 18% or something. You did
total was 18, but retail was some 41%.
Exactly.
Okay,
so do you think that that's sustainable? Because that is very much a function of technology. If you have been able to, digitize a great deal of your data, you should perhaps be a very good competitor in the retail space?
We think so. The board spent most of the last board meeting understanding how sustainable is this retail phenomenon, because it's quite staggering, right? On a decent base to be able to grow 40%, can we sustain it? We see no reason. Okay, so first of all, we've brought a lot of discipline into our lending. So everything in the retail side is your CIBIL score based. And the loan portfolio health is much better. We've got now a collections unit, blah, blah, blah. So I think it's good. The other thing to recognize is there are not that many banks we're competing with now. You have 11 under PCA, several others struggling, and while we're empathetic to their woes, it does say it's a much less crowded field of lenders. So I think Bob is uniquely positioned, having done this work, having a reasonable balance sheet, to actually sustain this growth. I obviously can't talk much about the business, but I think Jaya and the team seem to indicate Q1 will be fine.
You know, public sector banks have many challenges. Some of them, of course, are, you know, the way in which they are owned, and as you pointed out, meritocracy is not always possible, or, you know, incentivizing them with money and ESOPs is all not there. But separately, there is this fintech challenge. And then there is this roaring NBFC and private sector banks which are, you know, claiming the market share. What's your sense? I mean, lower your guard and give me a candid answer. What are the chances of public sector banks surviving this competition?
Well, I think if you look at the trends, they're not good. A few years ago, we had the public sector banks had 70% share. We're headed towards 60% share. Okay, so that's a very secular trend. Number two, the financial stability report said 85% of the frauds in the public sector system, although we are collectively about 65%. So that's, you look at the profitability, it's and you know, net interest margins, all that stuff, it's all under pressure. All this says, without fundamental reinvention, the writing's on the wall. I think any sensible person will conclude that we need a future banking system which has fewer, better capitalized, better run, more competitive public sector banks. But the big challenge is, how do you get from here to there? And that's where all the talk, I think, of mergers and all that comes in. So we have a point of view on that.
Okay. Then, the final question I wanted to ask you is that you are a veteran of many boards. I mean, you saw a fair degree of problems in the Infosys board as well, as, you know, a promoter-led company tried to become a professionals-led company. You know, the ICICI Bank board is also going through its own challenges. So it's not as if private sector has solved the problem of boards.
Not at
all. So what would your learning be? What's going wrong in these boards?
No, this is a problem that is perennial and far from solved, not just in India. We've seen what has happened at WPP.
Yes,
exactly. So it's a global phenomenon, not restricted to India or banking. And the thing I've learned about boards is, like Tolstoy says, all happy families are the same, but each unhappy one is unhappy in its own way. So you can't say, you know, the lessons of ICICI are not necessarily generalizable. What it does say is that we are in an extraordinary period of heightened challenges, where the media scrutiny and the public scrutiny is super intense. So you need to recognize that you're under a microscope, and every action will be discussed, debated. You will be second guessed. I think all these episodes show the importance of a strong chairman. I think that's incredibly, incredibly important. It's not just strong. You need to have wisdom, judgment. I think the stresses and expectations and demands on boards is just ratcheting up in a most remarkable way.
Okay. Well, Ravi Venkatesan, it's been a pleasure speaking with you.
Thank you, Lynn.
And I do hope that, say, a few months from now, when you will not have this guard of, oh, now I am chairman of BOB, I can say this and I can't say this, you'll be way more candid.
I thought I've been extraordinarily candid, and I hope I haven't got myself into trouble. But thank you for this wonderful conversation.
Thank you very much, Ravi Venkatesan, for joining us.